charts, the numbers run. The market's dance has just begun. Lines and graphs, they tell the tale. Winners rise and losers pale. Options swing, the clock ticks loud. The screen's a storm, the trades are proud. Closing playbook, time to see what the markets gave for free. Nate and Kane, they break it down. The ups, the downs, the trades, the crown. The trades, the crown. The bell has rung, the dust has cleared. Dreams were made or disappeared. Candlesticks like fireworks fly. Risk and reward, they never lie. Charts don't sleep, they scream, they shout. Dive right in or you'll miss out. Closing playbook, time to see what the markets gave for free. Nate and Kane, they break it down. The ups, the downs, the trades, the crowd. The trades, the crowd. Closing playbook, time to see what the markets gave for free. Nate and Kane, they break it down. The ups, the downs, the trades, the crowd. The trades, the
Hello, everyone. Welcome to the closing playbook for Tuesday, February 10th, 2026. I hope everyone is having a good day and doing well in your trades. And we are joined by the illustrious Nathan and Kane. And I don't really know what illustrious means, but I said it.
Hey everyone, how is it going? Hey Kane, how are you?
I'm good. Hopefully, we don't get weird sound issues again.
Sounds good right now. So we'll fingers crossed we still can get that. One thing I want to mention is we've got 29 minutes right now, and I don't think our overnight option trade is going to hit if you didn't get filled. I know some people did get filled early when we got that pop. But if you didn't, I mean, it's looking pretty unlikely because we need like a full $1.20 move or so on it. I want to mention, I think this one was a mistake on my part because of the sell-off yesterday. Right in the last 30 minutes, the trade was kind of behind. And so today, when the market was up 0.35% and we didn't hit, I should have just sent out an exit signal because the concept of the trade was achieved. We're trying to get a small overnight move in the market. We got that move, but then we still could potentially lose the trade. And that's something that I'm really a big believer in avoiding, is that when the idea of the trade works, but you still lose money, I think that typically means a mistake. Losing a trade doesn't mean a mistake, but when you get the outcome that you expect and you still lose the trade, that typically means a mistake. And so I'm going to make a little adjustment on overnight options, where depending on what volatility is, I'm actually going to have a rule in place where if we get a move and we don't hit our target, I'm going to send an exit anyway, because sometimes it is actually the 30 minutes of the previous day that impact the trade, not the next day itself. So just wanted to, I know most of you guys in here trade overnight options, so just wanted to give you that update, because I think today, even though, that's not a rule that I skipped, it's not a rule that existed, I still think it counts as a mistake and something that I would like to avoid going forward. So just kicking things off with Nate's mistakes as a nice way to open closing playbook.
Always good to recognize and correct your mistakes.
Yeah. Well, I know we've got a couple active trade type of things, at least. I don't know if we're going to have an earnings trade or not, but I will have a Mag 7 trade. And then, Kane, I know we ended yesterday's session where you were going to neutral out your portfolio. Do you want to kick off there, or do you want me to start with earnings? What's best for you?
Yeah, you go ahead. I mean, it
Okay.
was a $50 risk, and it's not a big deal if you're just one off on your portfolio anyway. So um, it's not a huge deal if we don't get something on.
I will say, based on today's price action, your idea of being neutral makes perfect sense. So here we go. Okay, let's start with Hood, because Hood is probably one of the more fun, kind of bigger names with lots of volatility. Lift as well. Market maker move here on Hood is showing right about 8%, and as you can see, as usual, pretty much in line with our typical move here on Hood. I was surprised to see that the winning reaction, at least immediate on Hood, is only 39%. Now it does neutral back out over the next couple of days. Even if it gets a dip, it does come back and end up being positive here a little bit more than 50% of the time, but not much. Q4, great on Hood. Again, this is 4 years, so I don't think you could take the streak too far based on just 4 Q4 earnings reports. But hey, historically over the last 4 years, been the best quarter, and we'll have to see if that holds up. I don't know if that's like people making New Year's resolutions and funding accounts in December, or if there's anything to read into there, but. One thing to keep in mind that really matters is that Hood is actually also a coin flip on kind of inside and outside the expected move, which threw me off a little bit because I would have expected Hood historically to be one that beats that expected move quite a bit, but it's actually pretty much a coin flip there. So we can look at Hood here today, and I would say unless we can get a calendar or something that makes us feel like we're getting well above the market maker move, it's probably not a really good tradable one. I guess I could throw an option strat and we could just look at it in real time. Okay, I can't type apparently. Option strat. There we go. We could just see if the calendar shows a huge range here on Hood going in. Hood is at 86, so right at the money right there. This is showing about a 14% range, but of course, we need to remember that volatility is going to crush down here tomorrow. First thing in the morning might be in the high 90s or so, so maybe a 7 or an 8%. And that is actually going to be right at the market maker move. So I'm going to say that one is not especially tradable for Hood. It's a coin flip. It kind of is a coin flip on the market maker move side as well. Let's take a look. Where did I put it? At Lyft. Here's Lyft. Big old market maker move as per usual. Again, kind of fits in those expectations. We've seen big 28% moves, 22% moves, 35% moves, but we've definitely seen some underwhelming ones as well. I didn't actually look at the market maker history, so let's check real quick. Let that load up, and we'll see if there's anything historically. I'm going to guess it's in the 50s or 60s percentile as well, but we can go ahead and check it out here. Let Lyft load. And yep, well, there you go, 50%. So again, not a whole lot to find exceptional about Lyft. Q4, wow, coin flip. Yep, nothing there at all in my opinion. Let's just run through our other names real quick. I'll open up Net here, and you guys can let me know if you have a name that you want to pull up, assuming it is on the radar today. Shopify, I think I had pulled up earlier, but got rid of. I'll pull that one back up. And then T-Mobile, we can take a look at real quick. I'm trying to move quickly here because I also want to give Kane time, and then I want to talk about the MAGS trade that I am looking at as well. So just going to move pretty quickly through here. Here's Net. Well, what do you know? Another coin flip. Another pretty big expected move. We are a little better on Q4, but not significantly. Let's see what net is showing. I want to make sure that's right on the actual platform side here. Yep. Yeah, that's right. About actually a little more even than that. About a $22 move here on net. Okay. And then here
I like the
is
T-Mobile. You want to take a look at that real fast?
okay.
T-Mobile.
Here's T-Mobile. T-Mobile is a little more reasonable, five and three quarters, and a little bit more positive as well. Historically, pretty much the same on Q4. What are you seeing on T-Mobile? You have a level that you like, Kane?
Just like the pricing on it, and then also the it looks like the success rate would be pretty good of staying inside the market maker move. So if you look at that calendar, the Feb 13, Feb 20, 200 call, it's like a what is that? It's like a 10-to-1 reward risk ratio.
Oh wow. Okay, what is the IV for that? Oh, it's not bad.
Yeah, well, it's not bad.
So even if this craters, we're still looking pretty good first thing in the morning here. I mean, that's pretty good. Okay, so a nothing burger move on T-Mobile could really do well here. I want that ROI seems almost too good, doesn't it? For
Yeah.
for team because it's not because the market maker move is big. It's $12, but it's not $30.
Right.
So that 200. Let's see. Looks like option strat maybe has it a little under. No, they don't. No, I'm seeing the mid price actually come right back down here. First it popped up for me showing 80 cents, but now it's showing 60 cents. All right, Dave, let's do that one. Let's do T-Mobile, the 13th and the 20th. And that's the 200. You guys can do calls or puts. I'm going to do the calls. And I'm showing 58 cents, which means, here it just adjusted there. Those ROIs look ridiculous.
Yeah, I mean, it was 40, then it was 70, now it's 50. It's jumping around.
Yeah, it's certainly going to jump around. I mean, there's a decent amount of interest here, but not enough to keep that mid-price steady. Now it's showing 45.
Yeah.
I wonder if I can get filled for 45 cents.
You want me to do with calls or puts?
Let's do calls. That's what I'm going to do it, so it'll be easier to track. I can give them the update on my exact trade. I am starting at 45 cents, but I'm sure it won't fill at 45 cents.
Sean got 58.
I don't think I'm happy to pay low 50s, though, honestly. $0.51. All right. That's pretty good.
Yeah, that's great.
I was looking at Humana also because it recently had a huge gap down, and I didn't know if it was a good opportunity.
Yeah, quickly it craters tomorrow, I guess. Oh, did I cut out there?
Yeah, a little bit.
Sorry. So that just seems like a ton of IV here, almost like more than we should have, but we'll see. We'll see how quickly it craters tomorrow. Okay. With our earnings trade there in the books, next I'm going to look at my next mag, the calendar idea. So for my mag 7 calendar trades, I am currently 1 for 3 on my 1 DTE ones, which I can't say is the best start I've ever had on a test, but I will say I'm 3 for 3 on my longer dated one. So I'll let the chat decide. Do you guys want the 1 DTE one, where basically binary, we're going to either win tomorrow or not? Or do you want the 3 DTE one, which, I mean, I thought would have a little bit lower win rate, but higher ROI, but so far is 3 for 3. Which one do you guys want? The 1 DTE, that would be Wednesday, Friday, or the 3 DTE, which is actually going to skip an expiration and be Friday, Wednesday. And that extra skip of the expiration might work to our advantage on holding the IV higher. I'm messing around with that. So let me know what you guys like.
While they're voting on that, yes, the dates are correct on the T-Mobile one. We're doing a calendar spread. The dates are different and the strikes are the same. But you want to give them, because we already have a question about exits, you want to give them your earnings play policy on closing?
Yeah, my earnings play policy is really simple, especially when it's only one DTE or less. We won't have that here. We'll have a couple of days to work with on T-Mobile. If the trade works out exactly like you want it to, first thing, then close it early. So in other words, if T-Mobile is doing nothing tomorrow or close enough to nothing that we have a nice ROI first thing, then I close it right away. If not, let's say T-Mobile moves 15% tomorrow and it's way outside that market maker move and we're losing, then I'm going to try to use time to my advantage and let the trade actually come back to me. So I think of earnings trades always as kind of two different trades: the win right away trade or the miss and hope it comes back trade. Kind of two separate instances of the trade. We had both of those occurrences happen lots of times. So hopefully you guys are familiar with what I'm talking about when I say that. But the really easy thing to do is ask me on opening playbook, which one is it? Are we closing or are we waiting because we're wrong? And I can tell you very clearly. Okay.
And then if you do hold it, you always want to close it out before end of day on the first expiration day.
Yes, on the first expiration. Yep. Okay, so looks like we got a couple votes here for the 3 DTE on. We didn't get a lot of votes, but I'll take the unanimous 3 DTE votes on the Mag 7 here. So that's going to put us on the Friday and Wednesday expiration, and I'll pull it up. Let me see what we're going to get here. There's 2 of these I was looking at earlier that were pretty interesting. It's still showing Meta as the best, which is a 3 and an 8, right? Yep, 3 and an 8. And it is giving us the max ROI of 326%. Obviously, we're not expecting to hit 326% because that would be holding it and pinning that price. But the idea being that with that max ROI, even getting a chunk of that, if price either does pin tomorrow and we can get out early, or even if it moves and then comes back, sometime before Friday, that we can get out. So this is the idea of the trade. It's the 672.50s on Meta. And that is, again, setting up a calendar with the 3 and the 8 DTE. Let me see, make sure that pricing is about right. Pulling this in real time, so it's not going to be perfect. Looks like it's bouncing a little bit now, about 270 right now. So that might be a little expensive. Let's compare that to this Microsoft one that seems to be a little bit more cost effective here. That's the 415s. Let me see if that one's a little bit closer. Yeah, that one's right on. It's actually about 142 right now. So that one's right on. Probably like that one a little bit better, giving us this 411 to 419 profit zone. That's not going to be exactly perfect because of IV, but I do think that IV should hold up a little bit better on this trade using the 3 and the 8 day expiration compared to if we were doing the 1 DTE one. So I like Microsoft. We can look at that one. It's actually showing a little bit higher IV than that right now. It's showing more like this, but again, that IV will come down. So should be able to do the 415s. Again, we're doing the calls here. Shouldn't really matter if you do calls or puts, but I'll try to get in a little bit under that price with a couple of the 415s. And then we'll just see if we can manage this. And this one, I'm not going to set a hard target on, but so far as I mess around with this, my rule of thumb is something like, a 20 to 30% win. And if it gets blown out, then I'll wait for it to come back similar to the earnings trade, and close it before that first expiration. So that we're not looking to get this 244% and pin it at 415. We're looking for the IV to hold up enough that we can go ahead and get out 20, 30, 40% ROI if Microsoft either hangs out tomorrow or even if it moves tomorrow and then comes back on Thursday, for example. All right, so that is our Mag 7 trade there. I didn't get filled for that yet. I'll let you know what I get. It's like maybe 144 will get it done. And it did. Okay, 144 on Microsoft. And by the way, you guys can take the Meta one if you like that better. But it's that ROI is definitely a little inflated because the price was higher there. Okay, any questions missed on that one? I think I got all of them. Cool. Well, I guess Kane, I'll let you finish up your long short there then.
All right, cool. So today I figured we did it. We did the short, so let's get a long to balance it out. In order to find that long, actually, I'm going to leverage a different piece of software than what I showed you yesterday, and that's going to be actually Nate's software, and I'm going to use the income machine. So,
Nice.
do you wanna pull it up, Nate, for me and see what's on there?
Yeah, give me 2 seconds. I'll pull it up.
We're getting a few people saying that the members area is down, but I'm in it right now and it's working for me. So I would say maybe they're having some intermittent issues. Keep trying it. If you need support, I'm going to put the number in here, but it is working for me at the moment.
Yeah, it's
Okay.
working for me too.
Same. Let me just make sure the income machine is also working and authenticating. Yeah, it is. Okay. I've got it open. At the top of our list right now, we have a good mix sector wise. So AMD is up there now because of its weekly close or its daily close yesterday. I don't love that one as much, but Exxon is on that list. Wow, Exxon looks insane.
Wow. Okay.
Wow.
Yeah. Yeah.
We called Exxon like 4 weeks ago. Really should have actually traded it, like I say about all my favorite calls in hindsight.
That would have been right there. Hitting that EMA would have been great. Yeah.
Yeah. Okay. Verizon, KMI is on our list, and Nvidia is actually back on our. I didn't realize Nvidia is back on our list here. Nvidia is not a 4-star; it's a 3-star, so not as highly attractive on that list. And then MMM is on our list. Oh, MMM looks pretty decent.
Okay.
Well, it hasn't quite got through that top of the zone there, but keep scrolling through here. Tell me if you want more.
Let's do one more just so I can compare.
Cisco is on the list, but that is pretty overcooked.
Yeah. Okay.
And then
AMD, which is not my favorite. Exxon, which is kind of a little overdone.
I mean, CVX is kind of similar, maybe not quite as overcooked as Exxon, but kind of in that same boat.
Okay, CVX.
Yep.
Yeah, very similar. Verizon, we've got earnings in T-Mobile tomorrow, so I'd prefer to avoid that. Triple M, and I think you said Cisco.
Yeah, and then there's some decent what we would call 3-star ones as well. Apple is on that list, and Qualcomm and a couple others that are just okay.
Okay.
Cool.
Apple is not looking bad to me, actually. So that's a bounce, pull, and then break back above the MA50, pull back. So we have a great amount of support right there. Right there. So a lot of chop over here, a lot of support right here. So I do like Apple as long as we can get some strikes at or below 270. And then what does the income machine, what's it, what, I mean, it doesn't always give longer dated ones, right? So let's see let's
see what we have here. Good news is always going to be volume in Apple to find some.
Yep.
Find
Nice
some
and liquid too.
Opportunities in there. Okay. So it likes the 265 out to March 6th. We don't have earnings on Apple, right? We're already through there. Yeah, we're through. How do I forget these things so quickly? So it likes the 260, 265 going out to March 6th. You'd have to get it below $4 for it to hit that threshold, that 25+% threshold. But if you like the 470 level, I'm sure you could cheat it up and get that into a 35 plus percent ROI if you like that 270 level a bit better.
Let's take a look what we can do over here, March 6th. And we'll start out with that 260, 265. Looks like we might be able to get $4.
Okay,
So-
yeah. That's what it likes, the 26% ROI for that level.
All right, so I'm going to try for 395 just because I don't like to take the mid if I don't have to, and I got filled right away at 395.
Oh, nice. All right, I'm going to
So-
take it too.
Dave?
I got it.
Yeah, you got it? All the details? No, great.
Yep.
Thank you.
I was just waiting to see what you got it for.
Yeah. Cool. And it might be cool. We do have a couple more minutes before the close. I don't think we're going to get another trade on. So, Nate, if you want to actually show them, like share your screen and show them what the income machine looks like, I think that'd be pretty awesome.
Yeah, absolutely. And by the way, that mid price is just even filled for me right away too. Even when the mid price popped up to 409 or something, the 395 filled right away. So, don't overpay. Don't use the mid price. That's we'll say that every closing playbook session, but
Hey, before you jump into that, there was a quick question about OPX. Was there a trade today that just didn't get filled?
Hasn't filled for me. I've still got the working order open. Let me just check it right now. Make sure I'm not lying. Nope. Still showing as working, still about 20 cents above what I'm willing to pay. So I have 350 as a day order. It's just going to fall away at the end of the day if it does not get filled.
I sent the
We got
others for you.
another end of day flush on SPY. It's loving these last 30 minutes. Just, flush is maybe too strong a word, but just giving up, that 0.10, 0.15% in the last half hour. Just getting annoying to me because I keep putting trades in at 330.
Yeah, same here.
So I have to start putting trades in at 355, guys. So anyway, this is what we did. We were looking at income machine. It's going to give you the top stocks. There's 5 criteria that I like here for these stocks. The thing with income machine is that while it is stock first, I am only taking stocks that meet criteria. Really, it's not a stock trading tool. It's an option trading tool. So it's going to find stocks that are at least stable enough to give me the opportunity, but then it's going to focus much more on the option side of the opportunity. So we liked Apple the best as we scrolled through and looked at these opportunities. Apple's currently a 3 out of 5 criteria. So it's not a 4 or 5. 4s are usually what I like, but if I like a 3 visually on the chart, I'm still going to take that over a technical 4 that I don't like as much, which is exactly what you saw Kane and I do on that back and forth. And then when you click the income strategies, that's really where the magic happens, because now it's going to say, okay, we have a stock, Apple, but how can we best take advantage of that from a defensive trading standpoint? And you can see it said there's no conservative that fit all the criteria. I don't know which criteria it didn't fit because I don't have the logs in front of me, but maybe the cushion wasn't big enough, or there wasn't something in the right time frame, or whatever the case might be. But it didn't meet any of those criteria, or didn't have any options that met those criteria. It found a balanced trade. That's typically going to be in the 20 to 30% ROI with a significantly bigger cushion than this one, which is our more aggressive trade. You can see here, bigger ROI, 46% ROI compared to 24%, but much smaller cushion, a 0.6% cushion compared to a 3.4% cushion. And what the income machine is saying is, listen, for Apple, which meets 3 out of our 5 criteria, is currently stabilizing, which means the lower time frame ATR is going down faster than the higher time frame ATR. 3% cushion is good enough trade. That's good. We feel comfortable with 3.4% of cushion on this particular stock. And that's important because we wouldn't feel good with 3% cushion on Hood or Tesla, right? But we do feel good about that cushion on Apple. So it has to be dynamic. And then it's telling you, here's how much ATR might move. It might, based on the gross, about $24 in the month. Anything that's like a third or higher for a 23-day trade is probably pretty decent. You'd love this number to be even higher, but right now with the VIX low, good luck getting much higher than that right now. And then when you click that, it's going to pull up the actual trade. It's going to say, okay, here it is. You're going to buy the Apple 260 call, sell the 265. Obviously, our expiration here, you can see 3.6. Here's the net debit. And then it's going to give you your profit matrix, which is essentially saying, okay, what happens in these different scenarios? If Apple falls 5%, I'm going to lose 86%, right? But if it falls 2.5%, I'm actually going to win the full 24%. If it is break even, I'm going to win the 24%, all of that. But of course, we actually want to adjust this to what we paid, which was $395. And that little adjustment takes that ROI up to 26.6%, which is what we want. Something over 25% in this cushion is something that I want. If we got filled for, 385 or so, there you go. You can see that would have been a 30% ROI. So what you get filled at makes such a big impact on that ROI when you're trading spreads. That's why you'll always hear Kane and I talk about, we're going to be patient, we're going to crawl, we're going to get the best price we can, because with a spread, you're capped. So the price you pay is very, very critical to the potential ROI you can get. And then I also put this income potential calculator just baked right in so that you know, hey, if I did 5 contracts, I have about $525 of ROI on a $1,975 investment. Again, that's the ROI, the 26.6%. And for me, if Apple doesn't fall more than 3% over the next 23 days, whether it goes sideways, it falls 2%, it goes up, to generate a 26% ROI is a pretty comfortable position for me to be. So that's why the income machine is really, yes, stock first. It's going to first give you stocks, but it's much more about the options than the stocks. I've got a couple new ones here popped up at the end of the day, like UPS, which I'm not going to get any opportunities now because the bell just rang. But UPS, it would say, okay, well, UPS is $117 stock. It's moving a little bit more quickly on a per dollar basis than Apple. So maybe we need a 4% cushion on UPS versus the 3% to feel good about the same 26% ROI. And it's just going to run those metrics and those, scenarios across every stock and every option and try to find you ones that fit in the conservative range, in the balance range, and the aggressive range. And then you can kind of pick your path. And I have some people who are doing multiple. So they'll take a trade and they'll actually do all 3 or 2 of the 3 and kind of ladder the position in different ways to blend the risk and the win rate over time. So there's lots of different ways that you can do it. And then the cool thing is if you have the VIP version, maybe my stock isn't even on here. Maybe you actually do want to trade Tesla. Well, then you can just type in Tesla. Well, if I could type, you could type in Tesla. You could type in Tesla and just manually have it pull the opportunities, click explore income strategies. And it's going to dive through all the options on Tesla and find you those scenarios on Tesla if they exist. So this is what, kind of the bread and butter for the income trades that you'll see me do. And it's because of what I just described. I really want to take trades more on the expectancy basis of how much cushion I have and how much ROI potential I have and comparing that than I do from a directional predictive standpoint. And so if you guys have not traded with the income machine, the coolest thing about the income machine is that we let you actually try it for free, which is something that we don't really typically do. And I think the developers were very annoyed at me when I had that idea that we would just give them access to the members area and do the free thing and then, let them upgrade if they want it, because it's no credit card. It's not like we're going to auto charge you or anything. It's literally free if you want to try it out, and then you can decide if you want to go from there. So if you guys have not used the income machine, there's a presentation like most things. You can watch it. You can stay right here, go through that presentation. It'll take you through the whole concept behind it, how that cushion works, all of those different scenarios. And you can try it for free if you haven't started using it yet. I think most of you, based on the names I'm seeing in the chat, I think most of you are using the income machine. But if not, I always want to give you the extra opportunity to do that.
So today you guys are going to see the first income tool of its kind. It's designed to give you different choices, different options, all done for you. And that way you can find the one that you find most appealing. And today, by the end of the class, you can unlock the newest income opportunity today. No payment necessary, nothing like that. Like Nate said, no strings attached. Now, the trades expressed today are based on signals that the income machine generated with the benefit of hindsight. And while today's guest, Nate, has been using this tool with great success in his own trades, including a 93.3% win rate as of this last week with a 4.92 profit factor on live signals. Well, you guys know that that's great, but there's going to be winners, there's going to be losers, so let's be smart here. Now, every example today is based on $2,500 unless otherwise stated. However, this is important. You don't need $2,500 to get started. A lot of these picks are as cheap as $100, $200. Some are even like $50. Now, the stories that we're going to share today were from real people who submitted their story for us to showcase. We did not meet with anyone one-on-one. We did not advise anyone's financial situation. We don't do that. We're publishers, not financial advisors. Now, each person makes their own decision when it comes to trading. So trade at your own risk, and you can see the terms on our homepage for more information.
And by the way, thank you for all those incredible stories you guys sent in.
We ended up with over 1,400. We asked for 500. We got over 1,400. Now, guys, just to say this one more time, there's no black box miracle system. There's going to be winners. There's going to be losers. So be smart. Make sure that you are trading risk appropriately, and then look to grow an account over time.
Sorry, Graham, my keyboard is whacking
Okay.
it.
Hi, I'm Graham Lindman, and I'm your host for the big reveal of what we're calling the Income Machine. And today, I want to invite you to get your hands on the Income Machine for free, and I really mean free. It's all part of a brand new initiative designed to help everyday traders target extra income from the stock market. Now, I'm talking about income opportunities that could be worth $250, $500, or $1,000 each week, all based on your own risk appetite and your own investing goals. You see, over the last few weeks, I've been privately meeting with trading superstar Nate Tucci, who is quickly becoming one of the most popular traders under the age of 40. Now, after using his aggressive income approach to publicly grow an account from 10,000 to 50,000 in about 4 months, and then quietly generating over 100,000 in his slow and steady income portfolio last year alone, well, now Nate has set out on a mission unlike anything we've ever done before. It's a mission to solve one problem that no one else in the trading world has. You see, most income methods out there box you into a single approach. They're either built for the ultra-conservative retiree, or they're designed for the risk-hungry investor who's looking to double their money. There's no flexibility, no middle ground, and no way to adjust the opportunity based on your desired approach, or even the ability to shift your risk appetite based on market conditions or other factors. But what if there was an income system that could do more? I'm talking about an income system that could help folks target $250, $500, or even $1,000, depending on what you are most comfortable with. Well, as you'll see today, that's exactly what the Income Machine was programmed to do. It's the first income tool of its kind, designed to help you dial up or dial down how aggressive you want to be with just a few clicks. Every day it uses a proprietary formula that scans the entire market, identifies the strongest setups, and then breaks it down into 3 specific trade ideas so that you can choose the route you want to go. The conservative approach, that's for folks wanting to shoot for consistent wins and limited risk, targeting right around $250 per trade. Or the balanced approach for folks wanting to target a little more upside, shooting for around $500 per trade. And then there's the aggressive approach. That's for those chasing $1,000 plus payouts with smart, calculated trade setups. Now, regardless of which approach fits you best, you'll get exactly what you need to act with confidence. You'll get the exact stock and options to trade. You'll get the exact hold time. You'll see the break-even price, the expected income potential, and even the calculated odds of success, all done for you. No guesswork, no noise, just a direct income signal where you have the power to pick the opportunity that you like the best. So whether you're in retirement, scaling up a side hustle, or just getting serious about finding new ways to help build monthly income, well, the Income Machine lets you pick your path. All you have to do is press go. And today we're going to give you a chance to try it out for free. You won't have to pay a dime, not even a credit card required. That way, by the time this class is over, you'll be able to start using it right away to access the top income opportunities already selected for today, targeting the next $250, $500, or even $1,000 payout right from your standard brokerage account. So Nate, it's great to have you on today. Show us everything.
All right. Well, hey, everyone. It is amazing to be here today, and I can't wait to give you the keys to this all new, fully automated income machine over the next couple minutes. A tool that can allow us to target, $250, $500, $1,000, sometimes even more, using an optimized income opportunity every day with just a couple clicks of the mouse on the tool. It's all thanks to an underlying market phenomenon that I've been using in my top income strategies. Phenomenon that's helped me with real-time win rates like 77.7% on overnight income, 80.5% on 2A income options. Those are a great income strategy for people, and even 100% on the weekend income strategy. So obviously, income, this is kind of what I do. These are all on live published trades. But now with the Income Machine, I've programmed something even more powerful all in one place to help us automatically source some of the best income opportunities each and every week, where you have the power to pick the approach that fits you best. Now, keep in mind, I'm not a financial advisor. I'm not going to go into what trades you should pick or what you shouldn't go with. That's obviously 100% up to you and what you decide. But I did the best I could to make this tool as easy as possible for anyone and everyone to use, regardless of your preferred trading style or income goals. That includes all sorts of people like Tim C. from New Jersey who wrote in. He said that he is working full time and enjoys hobbies like golf in his free time. So, of course, I like Tim because, that's me. According to Tim, he would like to supplement his income and scale his investment account before he retires. But Tim told us he doesn't want to just blindly swing for the fences. He wants something that's consistent and reliable with a very strong track record. So for anyone out there looking for the most conservative income opportunities, well, we've got you covered. Or how about this one from Tyler G? A lot of folks like Tyler from North Carolina. Tyler wrote in saying that he's a dad who balances a day